So you finally decided to invest in the stock market. Smart. But it could be pretty daunting and overwhelming, especially if you're completely new to investing or if you have very little experience investing on your own, right? You will hear all kinds of strategies and methods out there, of course, like dividend stocks and growth stocks, blue chip stocks, mutual funds, ETFs, etc., etc. But eventually you will probably hear about or stumble on what are usually referred to as passive index ETFs or simply index ETFs. So in my opinion, index ETFs is by far the easiest, the simplest, and the most cost-efficient way to start investing in stocks, even if you have no experience whatsoever. Because as we all know, it's extremely important to start investing in the stock market as early as possible so you could grow your wealth over time. So this is a perfect way to get started. But what are passive index ETFs anyways, or what is an index? What does that mean? Which index ETFs should you actually start with? And what are the advantages of actually investing this way? So in this video, I'll provide answers to all those questions and also give you an overview of two very, very popular index ETFs that you could get started with and really own forever as a do-it-yourself Canadian investor so you could grow that wealth over time. And if that sounds easy, well, guess what? It gets even easier because I'll also show you a way where you could invest in multiple indexes or index ETFs by simply investing in only one fund or one ETF. That's right, an all-in-one solution where you could own the multiple indexes all within one ETF. It doesn't get easier than that, so let's get started. So to understand what a passive index ETF is, we need to understand what an index is, of course. So what is an index? I'm on trusty Investopedia, and I won't go through the whole thing, but the key takeaways are pretty good here. So an index measures the price performance of a basket of securities, which could be a basket of stocks, of course, using a standardized metric and methodology. So that's pretty much what an index is. Indexes in the financial markets, which is of course what we're dealing with here, are often used as benchmarks. So that is really the key word to compare index to. An index is really a benchmark to evaluate an investment's performance. So some of the most important indexes in the US stock market are the S&P 500 and the Dow Jones Industrial Average. I'm sure you heard of those before. We'll take a look at them in a second as examples. And this is key here. Passive index investing, which is basically passive index ETFs, has become a popular low-cost way to replicate the returns of popular indices such as the S&P 500 or the Dow Jones. So that's basically what an index is, everyone. It's a benchmark where we can compare something to or the performance. So let's look at very quickly on Wikipedia, S&P 500. So S&P 500 is probably the most popular stock market index, which really tracks the performance or the stock performance of 500 large companies listed on stock exchanges or the United States stock market, right? So it's very, very common. It's a very, very common index that people invest in. There's many, many funds and ETFs that try to replicate the S&P 500. So if you're investing in the S&P 500, you're basically investing in 500 large companies. That's the key. So the Dow Jones Industrial Average is another very popular one that measures stocks in the United States, except it's 30 companies and not 500, 30 prominent companies. So these are very, very big companies that you'll probably recognize. If you scroll down, you actually have the name of them here. So these are two very popular ones in the US, indexes in the US. What about in Canada? Well, the most popular one is the S&P TSX Composite Index. So this kind of measures the overall Canadian stock market. It represents 70% of the total market capitalization on the Toronto Stock Exchange with about 250 companies. So this is the most popular one, I would say. In Canada, you have 250 companies in this index. So if you're investing in something that tracks the S&P TSX Composite Index, you're basically investing in about 250 companies. So that is what an index is. It's basically a benchmark. And these are some, three of the most very, very popular indexes, two in the United States, one in Canada. So now that you know what an index is, it's time to talk about passive index ETFs. So an ETF, which stands for Exchange Traded Fund, is simply a fund that can hold a million different things like stocks or bonds, etc., that's traded on an exchange or on a stock exchange. So they are publicly traded like any publicly traded stock, like BMO, TD, Apple, Google, Amazon, etc. So you could buy and sell them like you would any one of those single companies or single stocks. So an index ETF is pretty much or simply an ETF which tracks or tries to replicate a particular index, like one of the three that we just saw. So the reason why they're sometimes referred to as passive is simply because they are not actively managed. They are passively managed, right? So the fund manager of that ETF is not picking and choosing stocks or which stocks are going in the ETF and which stocks are not going in the ETF, because that's already predetermined basically by the index itself. So there is still a manager, but their goal is really to track their performance as quickly as close as possible rather to the index. So it's as simple as that, everyone. In short, it's a very easy and cost-efficient way to own a well-diversified portfolio of stocks in Canada or in the US or even in the whole world with just one or two ETFs, right? So how cost-efficient are we talking here? So let's check out now two very, very popular passive index ETFs managed by BMO, one of Canada's biggest ETF providers. And in my opinion, like I mentioned in the intro, they are two very popular index ETFs that you could basically buy and hold forever. Let's check them out. All right, everyone, time to look at examples now. So this is usually the best way to learn, and we'll look at, like I mentioned at the beginning, two very, very popular passive index ETFs. And I am on BMO's website here. That is the best place to do your official research when you're doing research on the fund's official website. So the first ETF we're going to explore together is ZCN, the BMO S&P/TSX Capped Composite Index ETFs. Sounds familiar to the index I showed you earlier on Wikipedia? Well, it's a very, very similar index, except this one here is capped composite index. So it's slightly different, and we'll check it out together. So if you scroll down, first of all, the first thing I want to show you is the management expense ratio. So I did talk about how cost efficient this way of investing is, but this is where you could really see how cost efficient it is. The MER is 0.06%, everyone. That means for every $1,000 that you invest in this ETF, you're only paying 60 cents in management fee. So it's really, really, really cost efficient. You see here the annualized distribution yield or dividend yield of this fund is 3.22% annually, and that's paid out on a quarterly basis. So what exactly is ZCN? What kind of stocks are in there? Well, if you scroll down, you will actually read what this ETF is all about, the strategy and the benchmark or the index it tracks. So basically here what it says is this ETF is trying to replicate the performance of the index, right? This is the index and it follows or tries to replicate. So here you have the actual information of what this index is. It includes over 200 top-ranked Canadian stocks representing approximately 95% of the Canadian equity market. So investing in this ETF, everyone, basically means you're investing in over 200 Canadian companies and 95% of the Canadian stock market. So it's a good way to invest in the overall Canadian stock market in a very, very cost-efficient way. What kind of stocks are in here? Well, if we scroll down, we could see the top 10, and you will probably recognize most of the names here. So here's the top 10. So 6% of this fund is Royal Bank of Canada, 5.48 TD Bank, Enbridge, the two big railroads in Canada, Canadian Natural Resources and Suncor are here in the top 10. They are the two biggest oil and gas producers in Canada. You have Bank of Montreal, Bank of Nova Scotia. So basically, the bigger the company is, the higher the percentage will be in this index. And the smaller the company is, the smaller it will be. So this is just the top 10. You could download or see all the holdings by clicking this button, and it will show up in a spreadsheet. But like I said, this is really, you're going to be invested in, if you're investing in this ETF, in the 200 plus biggest companies in Canada, with the biggest percentages going to the bigger companies. So a really, really cost efficient solution, everyone, to invest in the overall Canadian market. That's ZCN. What about the American market? Well, we have ZSP. This is the BMO S&P 500 Index ETF. So like you probably guessed, this ETF tries to replicate or basically follow the S&P 500 index. So again, very, very low management fee, 90 cents, or sorry, management expense ratio, 90 cents a fee for every $1,000 you invest. Very, very cost efficient. Annual distribution yield, or the dividend yield, is going to be lower than Canada, than the Canadian one for sure, because in the American stock market, there's a lot of their big companies like Amazon, Google, Meta, Tesla do not give a dividend because there's a lot of growth stocks in there, where in Canada there's more dividend stocks, so it's a bit lower. And if we scroll down, once again, you'll see the strategy basically said this ETF is trying to replicate the S&P 500 index, and then you see the summary or the definition of what the S&P 500 index actually is, which is probably the most famous index in the world, really designed to capture the overall US or American stock market. So if we scroll down, we'll look at the top 10 stocks again. None of them should be, they should be very, very familiar to you. You have Apple, Microsoft, Amazon, Google, Berkshire Hathaway, which is Warren Buffett's company, Tesla, ExxonMobil, Johnson & Johnson. So really the big blue chip, very powerful American companies. And the bigger it is, once again, the higher the percentage will be. So basically investing in this ETF, 11% is going to Apple and Microsoft. That's what we're basically seeing here. And these are two very, very good companies, right? So that is the two very popular index ETFs. I strongly suggest, in my opinion, really good to start with. You have ZSP from BMO, which is kind of like buying the whole US stock market. And then you have ZCN for the entire Canadian stock market. But I also mentioned that there's an all-in-one solution, right? And that all-in-one solution is called ZEQT. So this is the BMO All Equity ETF. Let's check out what's inside this all-in-one index solution. Management fee a bit higher, but still very, very low. You're only paying a $2 fee for every $1,000 that you invest. Annual distribution yield is 2.45% paid quarterly. So what's inside this all-in-one index ETF? Well, very, very interesting. Let's check it out here. So here is the holdings, and you will notice that the first two holdings are actually the two ETFs we just looked at. 42% is ZSP, which is the S&P 500 index ETF, which we just looked at, and 25% is ZCN. So this is very interesting, right? Because the first two really represents Canada and US. So you're capturing the North American market, or the best stocks in North America, basically. And it's about, let's see, 42 to almost 70% is really in these North American indices, which is very interesting. But there's also other indices here that you will see. You'll see 20% in the BMO MSCI EAFE Index ETF. So the actual ETF is ZEA. This is also managed by BMO. And this actually measures a lot of stocks in Europe, Japan, Australia. So this is basically Europe and Far East, basically. So you have American stocks, you have Canadians, 25% in Canadian stocks, you have 20% in European and Far East stocks, like advanced economies. We're talking Japan, Australia. There's also ZEM, there's 8%, is another index ETF that deals with emerging markets. So we're talking about Taiwan and China and Brazil and those emerging markets. So there's 8% there. So 8% of this fund holds the ZEM ETF, 2% in Z mid, and Z small, which has some US medium-sized companies and US small-sized companies. These are also other index ETFs, all managed by BMO. So this is kind of like a really cool all-in-one solution, everyone, to capture some of the best stocks all around the world, not just North America, not just Canada and the US, but all around the world. And it's also very, very cost efficient. So there's your all-in-one solution, ZEQT. So now let's talk about the advantages or the pros of this style of investing in passive index ETFs. Well, the first one should be fairly obvious. It's very, very cost efficient. It's very low cost. Like we saw, the fees are extremely low. They're much, much lower, pennies on the dollar than some mutual funds, which could be over 2% fees. So this is very, very low cost. That's advantage number one. Number two is instant diversification. If you're investing in an index ETF, you're capturing all the stocks within that index, whether it's a Canadian market, the US market, or worldwide. So you're going to get instant diversification when it comes to sector, right? You're going to get technology companies and healthcare companies and financial companies, et cetera, et cetera. Not only that, with the third option, the all-in-one, not only do you get sector diversification, but also regional diversification as well. So you're really casting that net far and wide. Advantage number 3, no stock picking required on your part. And I can't begin to tell you how much of an advantage that is, because it saves you a lot of time, a lot of energy, a lot of heartache. Instead of trying to pick and choose all these stocks, which single stocks to put in your portfolio, which adds more risk, because you're going with certain companies. In this way, this method, you're pretty much getting all the companies, right? So it's much safer. You save a lot of time, you save a lot of energy, and you also reduce your risk. Very, very important. Also, these are DRIP eligible, just like regular dividend stocks as well. So if we're getting a little dividend every quarter, you could turn your DRIP on, which stands for Dividend Reinvestment Plan. So the distributions will buy you more shares, which will help compound your effect over time, right? It will help you compound that growth over time. Another advantage is that this is a proven strategy, everyone. Okay, stock picking is really hard, but investing in the entire market via passive index ETF usually always works over time. It always works long term. As long as you're a long-term investor, this is a very easy and cost-efficient way, and it's a proven strategy that usually beats active managers and mutual funds performance, right? So managers or people who try to stock pick, it's proven time and time again that investing in these passive index ETFs usually beats them performance wise long term. So it's a very proven strategy. So all in all, that's basically it, everyone. I have to say that this is, whether if you're just getting started with investing, you're a bit scared to pull the trigger, and whether, maybe you don't know if you want to be a dividend investor, a growth investor, or an income investor like me, you simply don't know yet. Well, investing in these couple of index ETFs that we've covered is a very easy way to dip your toes, basically, and get started. Because in my opinion, it basically can never be wrong to invest this way, because the risk is fairly low. You're investing very broadly, and you'll start getting that practice and start getting a feel for it. And it's a very popular way to invest, so you could feel secure that you're not doing the wrong thing, or you're doing a mistake. You're really investing in all the companies in Canada, or all the companies in the US. So it's very broad-based investing. It's a lot safer than stock picking, and really a good way to get started if you're completely new and you're a bit scared, you're a bit hesitant. I pretty much feel, in my opinion, you really can't go wrong with passive index ETFs. Thank you so much for watching, everyone. I really appreciate it. Don't forget to hit that thumbs up button, that like button, and make sure you're subscribed not to miss out on my future content. Of course, hit that little bell next to the subscribe button so you're notified for any new content that comes out. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could purchase my digital product, the Ultimate DIY Investing Package, which is on version 4 right now. It comes with lifetime updates, so you only have to buy it once, which is awesome. So this is a companion tool. It's a reference tool that will help you build your own portfolio according to your needs and goals, and it covers both the Canadian and American and US stock markets. So make sure to check it out. I have a video explaining from A to Z exactly what the product is. I showcase it, so there's no surprises. If you're interested, make sure to check out that video. Also, right there on my website on the homepage, I do offer a one-on-one coaching session with me. So this is a 1-hour Zoom call with yours truly for in case you need personalized help. I'll answer all your questions and I'll help you best I can. Just remember, I'm not a licensed financial planner or financial advisor. These are just going to be friendly conversation, right? It's just going to be my opinions. But if ever you're looking for that personalized touch, that personalized help, you could book a one-on-one with me. Make sure to check out the message on top of that calendar. That will give you a status of my bookings for that month. Also, we do have a Facebook group, great Facebook group, over 12,000 members. So make sure to join our community. The group is called Passive Income Investing, a nice Facebook group where everyone is sharing their thoughts and opinions and sharing their experiences. So it's a really nice group. We make sure to stay on top of the scam and the spams, and we delete those right away. So make sure to join our Facebook group. If ever you want something more personalized with us, you could follow us on Instagram. That's where we post more personal things on our adventures here in Panama. So follow us on Instagram if you want. want. And how do I always leave you? Continue to stay safe, continue to stay healthy, and of course, stay passive. See you next time.